Hey everyone, how is everyone doing out there? We're going to get into our files. Not today. We don't need files because we're going to do something else today, a little time series. I'm going to try, if we can, I think PETA said the word. This is a term from them, kill two birds with one stone. So, what are we going to do today? A little time series, but learn a little about stocks and bonds and possibly forecasting. Now, we're going to need two packages here for the course. So, the first one is Tidy Quant. This is coming from Tidyverse, but it's Tidy Quant. This is more of a financial package that's used or should be used with a lot in finance. And as you can see, I've been doing this and for a while, not just with the Amazon, with S&P, Microsoft, Apple, etc. The other thing we need is, again, the library. But if you don't have it on, you have to install it, and you should know how to do that by now. The forecast package, there it is, to see if we can forecast some stocks for Amazon. So first of all, what we're going to do here, I might as well make it simple. We're going to use a few codes to get up stocks. You don't have to upload it through files as we usually do. What you can basically do is, let's say A for Amazon. We're going to use the add and get symbol sign. So add is getting the adjusted. You can get closed. You can get just a wide range of different characteristics of the bond or stock, or even GDP, inflation rates, currency rates. Right now, we're just going to deal with add, which is the adjusted. That's after the dividends of a stock, and we're going to deal with Amazon. And then you just put get symbols. This is all from the quant mod, as it says here, package. But it's very interesting. Tidy Quant actually hosts all these, or like puts them in all these different packages that are relevant for finance. So you have A for add, let's say get symbols. I want to get Amazon. You need a ticket number. All stocks have tickets. It's not a number, it's actually a sign. You have S&P has its own, etc. For Amazon, that's it, AMZN, all capital letters. And then we're going to basically do, you have to do for this, I didn't really question this why, but you have to do auto assign false for some reason. I should be more inquisitive and find out why and get really into it. But the point here is, one of the good things about the get symbols, we're getting a certain stock. This is Amazon. I'm going to see with chart series. Remember, that's chart series. We're going to see it on a time series chart. And remember, time series in a nutshell, time is the important variable that we're measuring on the stock. You could even consider it the independent variable. Like, our thing's seasonal. So a lot of people in business, say, for example, you have a store, you want to see what's seasonal or not. We're measuring this on fixed intervals of time. So it could be month, daily, monthly, etc. We're just going to do this as a regular and see if we can forecast it later. I'm not going to use the auto ARIMA and the PDQ, which is more advanced. I'm just going to do this basic a basic way in order to address this, because, you know, being the class, we have to move on, etc. And then later I'll get deeper into this. So let's just take Amazon, which is very interested from. What I like about this is like from, opposed to, you know, how our studio likes to use these different symbols. Like, instead of using and for and, they use the dollar symbol. But this is just from. And then let's say 15, you can take any arbitrary date, 0101. So that's the 1st of the 1st of 2015, comma, you know, ours obsessed with commas outside of the quotes, because this was created in a country that doesn't speak English well, New Zealand, because we do it differently. We put usually the comments within the quotes, but I'm just kidding to our New Zealand friends. And I always say, if you're from New Zealand and you like R, I say it was created in Australia because that really bothers them. But anyways, the point is that then two, let's do this, the most recent date. What year is this? Am I still alive? 2020. I mean, that's incredible. And at this time, we still don't know who the president of the United States is. Just kidding about that. It looks like Biden has won. So let's take 2020. Let's just take 1031, about a week or two ago. So we could use that. Ooh, 1031. Is there a 31 in that? And what we have to do here is to basically see. Oh, I wanted to call it Amazon anyways, because then it comes up like I want to show you. So sorry about that. Amazon stock. So there we go. So we basically, well, let's see if it comes up. And it does. That's how you know that it ran correctly, even though we have all these things. I don't really read them if I can get it up. But that's Amazon. So you can do a few things with this. We have now through, I believe Get Symbols is using Yahoo Finance in order to draw up that stock so you can basically see. Well, first I want to see what is class. What class is this? What you're going to see is this is a different class than most of the time we're used to. This is more time series. So right, XTS is time series, Zoo type of time series. So this is time series. It's different than the other vectors that we've been dealing with, even the matrices, that this is made for time series. So if you look at it, let's look at the head of this. The head will just be the beginning, Amazon. We start seeing stock. So this is the adjusted stock price for, and obviously it's almost just about daily, 2, 5, 6, 7, 5. And then if you look at the tail of Amazon, you basically, this is the Amazon stock now. This is the last part. So yeah, it goes all the way up to the 30th. This is where it, and if you notice, it goes up, down, etc. So what you want to basically do is you want to see how this moves. So it's very, very important in order to understand. I call these ones somewhat different things, but what I want to do most importantly is this chart series. This isn't ggplot or the default graph in R. This is from chart series. It's a pretty good looking graph from QuantMod. So we can literally, and you can do just about anything with chart series. I really like it. And then as you can see, here it is here. It's a good looking chart, Amazon. This is interesting because now we're charting just from January, the beginning of January 2015, all the way up to the current time. And this is the adjusted closing price of the stock. So this is what we call time series. And what's very interesting, in my opinion, on this, there's been a lot of criticism, people making money in the pandemic. It went down a little during the pandemic, but look at how high and it's gone during the pandemic. Let me zoom this in, but I have to share the Zoom, the plot Zoom. So here, you should be able to see it now. So it goes all the way up and it dips down here. Notice, it dips. There are little dips of this stock. But it just kind of goes down and up. But you see a upward trend of this stock, this daily stock. And that's, in a nutshell, what time series is about. And then you can start adding different variables like, do stocks go down during natural disasters? Something like the COVID, obviously, an extreme example. You can use the Dow Jones. You can use just a wide range of stocks. You could use GDP of the United States. There's a way to do this without going into an Excel file. Again, we did not go into an Excel file. We just got Amazon stock. This is Amazon stock. It's closing adjusted price. That is not just closing price, but adjusted price. And I think that this is worthy to understand, since it's very, very important way to find these time series. And there's also, as I go up here, you can do a lot of different things with this. One of the interesting things about this is I got the tidy class, and we saw the class, etc. We're still doing more forecasts. I'm not going to do auto ARIMA and PDQ right now, but for the people who are interested, let's say we want to forecast a stock to see how it will be in the future. Let's call it Amazon 2. Let's say we basically just want to forecast it using the regular forecasting. That's from the forecast package that you have to get down. So now we want to just do Amazon regular, not two, obviously. And H is the amount of points. I believe it's days in here. So let's just say we want to do, 300. So now we want to just, now this is notice the plot is just the regular one. Amazon 2. Okay, so this basically is forecasting what they believe drawing upon the earlier stuff, what the stock will do. So it goes up here, we have the most likely, and then around here, and then obviously, like, I think that's like the 5% likelihood. But as we get more into the future, it goes up and up. So let me zoom that in really quick because it is an interesting way. So that's based in a nutshell. What they try to do is forecast where stocks will go so they know how to pick them, etc. Now this is a rudimentary understanding of time series and forecasting. Like I mentioned, I didn't do auto ARIMA or anything like that. But it is very interesting just to get kind of used to doing these time series, time in these certain intervals. We could do it months, we could do days, we could do years. I didn't do the periodicity in this one, nor did I do the auto ARIMA, PDQ, which gets more advanced. But I just kind of wanted to show you some of the basics of doing time series. So this did well. Considering that we did a lot here. So we learned two packages, forecast and the tidy quant. And then, up here, we did the Amazon add get symbols. Amazon, that's the stock, auto assign false. You have to put them from any date you really want. Then I showed you the class. It's an XTS. That's a time series. Zoo. That's also a type of time series that we'll get into. You can do head, and then you get the beginning, tail. You get the last. Then we use chart series to basically see the time series chart of Amazon stock, and then making it Amazon 2 in order to forecast it. I did it, 300 days or something in advance. That you need the H, and then that's the time interval. Since this seems to be by days, that would be 300 days. Then we plotted it, and then we got the forecast. So that's pretty interesting dealing with time series. And in a nutshell, this is a rudimentary understanding. I will have other lectures on the auto ARIMA. Usually you see people, if they do this kind of thing with students, they use the air passenger. Air passenger, for the people who don't want to know, that's automatically in our, I don't want to get into it. You can see it there, and then you just kind of load it, and it's already there. These are air passenger flights, and you basically, it's just in there from the 60s, I think, up to like 200. I forget. Let's see. The head of air passenger would be, this is what they usually use, but I wanted to introduce you to the stock part. So it goes all the way up. 1949 is the head. Let's see the tail end of it. So that's basically the tail. I think it's the 60s it goes up to. And then, 1960, July, August, September, October, November, December. These are like air passengers. I don't know where they get the exact data from, but it's already in our studio. But I thought it would be better to show time series with stocks. And if you want to get another stock, you can get another stock. There's so much you can do with this data. So thanks for coming out for a kind of a short rudimentary understanding of time series, where time is of the utmost importance, and you're using something. It could be GDP, it could be currency exchange rates, and the time is the interval over time, how it's changing. So time seems to be the independent variable here, but then you add these other variables like, does natural disasters, is a good example, hurt US GDP? Does it hurt currency does it change currency exchange rates, etc. So you could do like the Colombian peso, the Japanese yen, the euro with the United States dollar, and see it in a time series manner. So time series is very valuable just for a broad spectrum of different disciplines, particularly economics and finance, to see that. And this is forecasting. They try to forecast into the future. That's kind of difficult. If you've taken my class, I'm incredulous about this because look at the COVID. No one was going to predict this. So, what did that do to a wide range of stocks? And again, that whole criticism of Amazon making millions, it does go up significantly, as we saw in the last chart of the chart series. So you do have these kind of millionaire, billionaire COVID people making money. So you can, you know, think about ideologically speaking what that means for you. Should Amazon be paying more in taxes? Should they be investing more in the community, etc.? So thanks a lot for coming out for this one, and I hope you found it valuable, and I hope everyone's staying safe out there as COVID seems to be increasing more. But as COVID increases more in the United States, it seems like so will Amazon stock and profits. Thank you so much.